Hi, today I'm here to explain what are costs. In general terms, cost is defined as the value of money that has been used up to produce something. For example, the company is producing a t-shirt. The amount of money that the company used during the process of producing a t-shirt is the cost of the t-shirt. There are 5 different types of costs, which includes fixed costs, variable costs, semi-variable costs, direct costs, and indirect costs. First, we will be talking about fixed costs. Fixed costs are the cost of production that a business has to pay, regardless of how much it produces or sells. For example, rent for shops and offices will have to be paid at the same amount, no matter how much a firm sells or produces. This graph shows the relationship between costs and the output for the fixed cost of a business. As shown on the graph, no matter how much the output increases, the cost stays at the same. Now we are going to talk about variable costs. Variable costs are the costs of production that change in direct proportion to the level of output or sales. This means that if the level of output or sales doubles, the variable cost will also double. For example, raw material costs will increase if a furniture retailer makes more chairs. This graph shows the relationship between cost and output for the variable cost of a business. As shown on the graph, when the costs increase, the output also increases. Adding the total variable cost of the production to the fixed cost gives the value for the total cost. The red line in this graph shows the sum of the total variable cost and the fixed cost. The third type of cost is semi-variable costs. Semi-variable costs are those that contain an element of both fixed and variable costs. For example, cell phone bills may allow a user to have a predetermined number of free minutes. However, there is also a standing charge, which means no matter how much or how little the person uses the phone, there is a fixed minimum monthly charge. If the user exceeds the quota of 3 minutes, then the telephone bill becomes variable. The fourth type of cost is direct costs. Direct costs are specifically related to a particular project or the output of a single product. Examples include consultancy fees, solicitor fees, telephone bills, postage, photocopying costs, mortgage fees, and bank charges. Lastly, we are going to talk about indirect costs. Indirect costs are those who cannot be clearly related to the level of output of any single product. For example, the cost of fuel and power can be associated with the level of production, but may not be directly linked to a particular product, but apply to several or all different areas of the business. In conclusion, we can use this graph to summarize the 5 different types of costs. If you want to be specific, we can use the following graph. It classifies the different types of costs into different categories.